Happy Halloween. The stock market gave traders a bit more of a trick than a treat today, as we did see all four key U.S. equity indices in the red when it was all said and done. We were led lower by the small cap Russell 2000 index, which was down 0.66%. The day started off with some disappointing PMI numbers. We then ended up hearing some rumors that China and U.S. trade talks were not going as smoothly as some had expected. Tomorrow we do have the employment report coming out, so that has the capability of moving the markets, but for now we remain with bullish postures across the board. I want to talk about all of that and then discuss our trade application example from one of the largest banks in the United States. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 31st, 2019. First of all, if you're new, welcome aboard. Make sure you go over to YouTube and click subscribe to our channel. While you're there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee, and we appreciate those of you that click like and retweet on these Market Outlook related posts. Lastly, we do have a presence on Facebook as well. Feel free to join our group in the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This will show us all four of our key U.S. equity indices. And as I stated in the intro, we remain with bullish postures. We can see that very quickly here by looking at the background color of the charts here currently. And in all four cases, they're green. And remember that the way that that is being judged is by using the green line on the market forecast technical indicator that you can find on the Thinkorswim platform over at TD Ameritrade. And when that green line is in the upper reversal zone, like it is in all four of our charts cases, that effectively means that we have a strongly bullish posture. And it doesn't matter whether the line is rising or falling, as long as it's above 80 in that upper reversal zone, it is considered strongly bullish. And that is where we find ourselves right now. However, like I also mentioned in the intro, all of our candles are red today, so we did have a little bit of a pullback. And in the case of the Russell 2000, this was actually the second straight pullback here. Now things haven't gotten aggressively ugly to the downside, haven't had extreme selling or anything along those lines, so we don't want to sound the alarms. It's just that we're taking a little bit of a breather after making a pretty nice run of things here since the beginning of October. Tomorrow begins a new month, and remember, that starts the whole best 6 months philosophy. For those of you that are familiar with the Stock Traders Almanac, you'll know that there is a philosophy out there where if you're in the market between November 1st and the end of April, that's where basically historically all gains have come from over time, whereas the other 6 months of the year are a bit more hit and miss. So hopefully we're entering into a bit more of a bullish time period starting tomorrow as well, now that we've gotten through what had traditionally been known as a little bit more of a volatile month of October, although we didn't really see much of that ourselves this year on this time around. So anyway, we are kind of heading into the winter months here in fairly good shape, as all of our charts not only have bullish postures, but 3 out of the 4 charts do have these green moving averages here currently as well, telling us that price is above rising moving averages. All right, let's go ahead and take a look here at our next chart setup. Let's take a peek at the 3 green arrow philosophy. This is chart 4D. And as it stands right now, we have 3 green arrow signals on all 4 of our charts here as well. The green background color will tell us that on this particular chart setup. The ones that are probably a little bit more close to giving us a red arrow, I would guess would be the Dow Jones. At this point, you can see the Dow Jones's MACD histogram is kind of starting to roll over here. And remember, when this bar comes down below the 0 line, it would produce a red arrow at that point. You can also see that we're trading, as far as the price candle, that is closest to the moving average compared to the other 3 charts on the board as well. So remember, when price goes down and falls below the 30-day moving average, it would also produce a red arrow. So on a couple of accounts, it does seem like the Dow Jones Industrial Average is the one that is at risk of losing its 3 green arrows strategy the quickest. Let's go ahead and take a look at a longer time period now. This is the 1040 crossover method. This is chart 4C for those of you following along at home. Now this is pretty interesting. Down below in the lower right, this is the Russell 2000. Those of you that listened to my presentation on Tuesday, just a couple of days ago, will recall that we actually had a green background color at that time. We had a positive crossover. Some of you might refer to it as a bullish crossover or a golden crossover. And what we're looking for with this particular chart setup, first of all, this is a 3-year weekly candle view that we're looking at, and the orange line represents the 10-week moving average, the blue line represents the 40-week moving average, and for the last several weeks, we've had the orange line below the blue line. Well, earlier this week, for just a second, we had the orange line above the blue line. But I mentioned on Tuesday that we can't count that. It's not set in stone until Friday afternoon when the market closes, because each one of these candles are weekly candles and it's still being shaped. So earlier this week, it appeared that we were going to have a bullish crossover. As of this moment in time, we gave that back, and that's what's going to happen when the Russell 2000 has fallen the last 2 days since I gave the presentation on Tuesday. So we'll see how tomorrow shakes out. You can see we're extremely close. So if I were to right click and go to maximize sell there, I mean, with a naked eye, you can barely even tell whether the orange line is above the blue line or the blue line is above the orange line. Remember, you can use this weekly and daily PPO indicator down below here to kind of get that understanding as well. And this number here in the purple, it has a negative sign in front of it or a minus sign in front of it, so that lets us know that that purple line is just barely below the 0 line. If that turns to a positive number, basically tells us that this 10-week moving average is now crossing above the 40-week moving average. So if we get a boost tomorrow in the stock market and this candle closes near its highs, we will likely have a crossover. If the stock market is down tomorrow, then it's going to be another week where we have a bearish crossover, and we're just kind of playing the waiting game until perhaps we'll get a bullish crossover in the weeks to come. With the other charts, of course, we remain bullish, and we have been for quite some time, so that really hasn't been the story. We've had a bullish posture on the Dow, on the S&P 500, and on the NASDAQ, really going back since February of this year. So it's really only been the Russell 2000 that's been the laggard, and it's about ready to turn positive here at any moment. It could be as soon as tomorrow if we get a big day in the market. All right, let's go ahead and now take a look at some 12 grid analysis, starting with chart 5A with the asset class 12 grid. As a reminder, the background colors of these charts will tell you whether we have a bullish posture, a bearish posture, whether those are strong or weak, or in some cases whether it's completely neutral posture. For instance, this one here that you see kind of in the middle. Notice that the strongest charts are all on the top of the board here. This is U.S. stock, so that's the SPY that we're using up there for that one. And then EFA, that's our foreign stocks from the developed parts of the world, Europe, Japan, Australia, etc. And then we've also got emerging market stocks here. So really, from an asset class perspective, the stock market is the place to be. For a lot of you, that's music to your ears, because for many of you, that is what you're trading is stocks. You're not out there trading currencies or commodities or what have you. So that's a good sign. As we head into the end of the year, stocks are firming up, and there's going to be opportunities for us to look for. Another thing that we've been kind of looking at here recently is in the lower left. Notice the U.S. dollar sold off for the 4th straight day here. And this is kind of what I was afraid of. We've got this oversold cluster signal, in fact, 2 of them in a row there, that led to a dead cat bounce, but now we're starting to see that roll over again, and that is my expectations, as I mentioned here a couple of presentations ago, is when we have a violent move through that 30-day moving average like we did in this particular case, where it does not bounce like it did back there or back there, and it goes straight through it, and then all of a sudden that moving average starts turning red, and then we start getting these oversold cluster signals. My expectation is that we get a momentary reversion to the mean type of a move, but that will not change the trend. And so far, that is playing out as expected. In other words, it approached that now downtrending 30-day moving average and decided it just didn't have the strength to go up and through it, and now it's reversing course. So right now, my expectation is that we will cross below these candles that were set back on October 21st. So we'll keep our eye on that story. Of course, the U.S. dollar is a very important asset because it can have reverberation throughout many other financial markets, including commodities and foreign stocks, etc. Gold had a big day. So you can see gold was up 1% here today. I was looking at a few of those miners. I know we placed a trade on Kirkland Lake Gold here recently, KL, and we've got a position on GFI. I was also looking at GDXJ, so that is the junior gold miner. So GDXJ is this chart right here. Nice little boost there. That particular ETF was up 2.56% today, and now is clearing above some of these prior highs here as well. So we went from being in some lower highs and lower lows to now what appears to be getting a slight higher high if you're looking at this candle from where we were trading back over here. So we'll see if that can get the gold bugs humming again, as they were earlier in 2009 after taking a couple of months here in the fall off. Let's go ahead and take a look at a couple of other 12 grids here. Let's go over to the U.S. sectors 12 grid. This is chart 5C. And here you can see we've got a little bit more red showing up on the charts. We've got energy, which is no stranger to be in the red. As most of you are aware, energy is the sector that has struggled the most consistently throughout the last year or so. The other ones on the bottom doesn't represent that situation, as real estate, utilities, and staples had once been some of the hotter areas of the market. And it's not as though their charts are breaking down in a violent fashion. They're really holding the line. Really what's taking place here is you're starting to see more money kind of drift and rotate into some of the more cyclical areas out there. So anyway, I mentioned in the intro, we'll be trading a big bank in the United States for our trade application example in tonight's video. And as you can see up here, the financials continue to retain their strongly bullish intermediate posture. You can see that the intermediate line is at 93. Now it's falling, but again, anything that's in the upper reversal zone above 80, it doesn't matter whether the line's falling or rising, we would consider it strongly bullish. So financials remain one of, if not the hottest area. I would say healthcare is right there as well. Notice that the healthcare's intermediate line is at 95, so maybe even slightly stronger than what we're seeing there out of the financials. Healthcare has had quite the move here recently. In fact, we had a conversation about some healthcare securities today. I taught my my question and answer session, and that is now posted. So I had some folks asking me about Vertex Pharmaceuticals and then also AbbVie. So if you're curious about my answers on those stocks, or my answers to any other of these questions that you see here from our premium members, feel free to check that out on our calendar. Again, assuming you're a premium member. If you're not a premium member, unfortunately, that's one of those presentations you do not have access to. But if you are a premium member of Market Scholars, feel free to check that out. And then remember, David will be hosting his question and answer session this coming Saturday morning. That is beneficial for those of you that have a busy work schedule in the middle of the week. Take some time out of your Saturday morning and spend it with David. He's an outstanding professional, and when it comes to technical analysis and other forms of options trading. So I think you'll enjoy your experience with him as well. Also, while we're over here on the internet, did want to say thank you to those of you that clicked like the last time I did the video. 105 of you did that, and anytime I'm up and over 100, I'm happy about that. So thank you so much for those of you that go out of your way and consistently do that day after day, letting David and I know that you want us to continue these videos. All right, back on track here now with some of the 12 grid analysis. Let's go ahead and take a look at how about some global markets now. So let's go over here to chart 5E. This will be our primary markets. The only pink chart on the board is Canada. That's down at the bottom. That is somewhat new. You'll recall that when I did this video on Tuesday, all of these charts were green. So all of a sudden, Canada is starting to show a little bit of slippage there. You'll notice that Canada didn't have an opportunity to form a higher high, whereas many of the other markets that you see on the board is doing exactly that. So notice that over here in Canada, we put in a high back here on the 19th of September, and the most recent high right here on the 28th of October was well short of crossing up and through that area. So that's not a good sign. You'll also notice that the moving average itself is rounding and rolling over here. So Canada all of a sudden starting to look a little bit weak in comparison to a lot of these other foreign markets that are out there. You know, we've been talking about Japan. Japan's been extremely strong here recently. We've been talking about United Kingdom. It's still in a nice upward trajectory. There's France. There's Italy. So a lot of those European nations continue to look very interesting from a trending perspective as it stands right now. Really, all the charts look pretty decent, whether it's Europe or not. India looks okay. South Korea is looking okay. So for the most part, we're pleased with how action has been unfolding overseas in other markets besides the United States. Let's go ahead and now take a look at the secondary comparisons here, or 12 grids. And so these will be countries that aren't quite as big from an economic perspective as that first group that I just showed you a moment ago, but nonetheless can provide interesting trading opportunities. Here we do have 3 charts on the board that are currently pink. That's Turkey right there, kind of in the middle. We've got Saudi Arabia off and to the right, and then we've got Argentina on that bottom rung right there. And as you can see, each one of those charts has things that look, decidedly bearish, right? With Argentina having fallen off of the map back here in August and just has not been able to regain that ground ever since then. Saudi Arabia has been in an extreme downtrend for the entire 3-month period on this chart, clearly a path of lower highs and lower lows. And even Turkey, while it might not look quite as bad as the other two, still leaves a lot to be desired, because right now you had this reversion to the mean type of a move off of that oversold cluster signal, went right up to that downtrending 30-day moving average and decided it just didn't have the energy to get up and through that moving average. So now it appears to me that it's using that moving average as a resistance area. And we're now at our lowest level here, going back over the last week or so on Turkey, and it's looking like it wants to drop even further from these levels. So we got to be a little bit more careful on that particular chart. As far as the ones that look a little stronger here, I would probably look towards that bottom rung. You'll notice Switzerland looks very strong there. Speaking of Halloween, of course, Nestle, one of the great global companies that is headquartered over in Switzerland. That particular chart is off to the races right here as we're hitting, or at least touching, 3-month highs as of today. We also see a very strong chart here from Taiwan, doing a bit better than some of its peers there in Asia. And so a couple of strong charts there to sink your teeth into and see if there's an opportunity from your perspective. All right, so with that out of the way, let's go ahead and talk about our trade application example here for tonight. And I'm just going to come back over here to a normal 1 grid on the market forecast, chart 4A. And I'm going to pull up ticker symbol C. Yes, just 1 letter, ticker symbol C, and that, of course, stands for Citigroup. And Citigroup, like a lot of U.S. banks, has been on a nice upswing here recently. Really, ever since kind of bottoming out back here in mid-August, we've had a fairly strong bounce of higher highs and higher lows. And a lot of the big bank charts look like this. You know, JP Morgan's hanging in there pretty nicely. Wells Fargo, for all of its controversy, has gone up nicely here recently. So, you know, there seems to be something to this move within the banks that we've been seeing in the last couple of months. And as you can see, we've had a couple of down days here recently, 3 or 4 down days on Citigroup specifically. But it is setting up a specific trade signal that we look for when utilizing the market forecast technical indicator. And that trade signal is a bullish intermediate confirmation signal. That signal exists when you have a bullish posture on the green line. And remember, that can exist anytime the green line's either in the upper reversal zone, like it is right now, or you could have a situation like it was back here in September where it was simply going up between 20 and 80. That would also be considered bullish. So one of those two things has to exist. The other thing that has to be combined with is that the red line has to be in the lower reversal zone. There it can't just simply be falling, it has to be in the lower reversal zone. So bullish intermediate posture, red momentum line in the lower reversal zone. Now, you've heard David and I talk about there are more ideal candidates and there are less ideal candidates when it comes to this idea of a bullish intermediate confirmation signal. And typically what we're looking for to have a more ideal setup is having the blue line residing somewhere between 20 and 50. And as you can see right now, the blue line is firmly entrenched in that zone. In fact, you can see right here in the label, it says the near-term blue line is at 30.2 73. So clearly between 20 and 50. And then the other thing that we like to look out for is just making sure that the red line isn't extremely low. And what we mean by extremely low is below the reading of 5. So we want it kind of to be between 5 and 20. And that is, again, where we find ourselves right now at 17.97 there on the red line. So this is what is known as a bullish intermediate confirmation signal, and you could take it one step further and say it's a more ideal bullish intermediate confirmation signal. The other thing that I would say is you have the possibility of old resistance becoming new support with where this stock is currently residing. You'll notice that this was kind of a topping formation that we had back here in the middle of October. We eventually got up and through that area, and now that we've cleared that area of resistance, it can now represent a new area of support, and we've pulled back right back to where that candle was with today's candle. If that doesn't hold, obviously the 30-day moving average isn't all that far away either, and you can see that it's done a pretty good job of holding the line on that 30-day moving average, both right in this area and then also again kind of right in that area. So right now we're dealing with a stock that has higher highs and higher lows. We have a bullish posture from an intermediate perspective. We have a bullish intermediate confirmation signal. We've got a bullish market sentiment line that's at 61 and rising. We've got price above a rising moving average. We can tell that with that green moving average color right there. And we have a technical analysis theory of old resistance potentially becoming new support. So for this particular trade, we're going to go ahead and do a bull put spread, and that is a credit spread where you're selling that spread to begin with. And it is acceptable for that type of a trade. If you're selling an out-of-the-money spread like we typically do, it's acceptable for that type of a trade to simply go sideways. We don't need a big move higher. We would accept it. We would be happy about that, but we don't need it with this type of a trade. Sideways is perfectly fine for us. So I'm going to come on over here to the Trade tab. You can see I've got my order pulled up down below. And the one that I've selected is the November weekly contracts. The November 29th weekly contracts to be specific, and it actually happens to have 29 days until expiration as well. You can see I've selected the $69.50 strike to sell, and that's your put. Remember, these are not calls, these are puts. So we're selling the $69.50 put, and at the same time buying the $68.50 put. And that's a $1 wide spread. Now, obviously, if you want to do a $2 wide, you can do that as well. Your return on risk is oftentimes just slightly worse if you do a $2 wide, but you can sometimes save on commissions. Now, that used to be a bigger topic than it is now. As most of you are aware, commissions have largely gone down, in some cases down to zero. Of course, in the options world, you're often still paying for something. But the point is, some of you might have refused to do $1 wide credit spreads in the past as a result of your reluctance to pay too much in commissions. You might want to reevaluate on whether that still should be your thought process going forward with the new rates that many of the online brokers have come out with. So in this case, we're just going to do a $1 wide. Now you can see right here, after hours, the credit is showing me of 23 cents. If it was at 24 cents, we would be above that 30% return on risk. At 23 cents, we're at like a 29% return on risk. So I'm just going to put it in at 23 cents right here, but I'm pointing that out in case some of you are very diligent with needing to get a 30% return on risk. And if you are, then you might just want to bump that up to 24 cents. You might need to change that from a day order to a good till cancel order because there's no guarantee that's going to get filled tomorrow. Heck, there's not even a guarantee that this 23 cent one's going to get filled tomorrow. But the point is, you would have to require a little bit more of a pullback in the stock, and it very well could happen. But for my purposes with this paper trade for educational purposes, I think just doing it at the 23 cents is perfectly fine for me. Now, when I click on confirm and send, you'll notice that our break-even price is $69.27. For those of you that are newer to this trade, this selling of a bull put spread, what you'll want to know is that you want your stock to stay above the break-even price that you see right here. So this is a stock that's currently valued at $71.86. You want it to stay above $69.27 for the next 29 days. Now, where that is on the chart, so hang on just a second, 69.27 on the chart is about right in Right there. Got it perfectly. Right there is 69.27. So that's our break-even point. Now you'll notice that as you follow and track that crosshairs to the left, that is a high congestion zone, between, let's call it September 9th through September 30th or thereabouts. So the hope there is similar to what I mentioned before, old resistance becoming new support. If it breaks through this first level right here that I mentioned, where we're sitting today, then perhaps it'll go down to this level where we spent all this time during this period right here, and we'll attract some buyers as a result. And if that's the case, and those buyers then send that stock higher, then our bull put spread should be profitable 29 days from right now. So let me go ahead and place that trade, and we'll see if we can get filled on that first thing in the morning. All right, well, thank you for joining me here. Happy Halloween to all of you out there. Enjoy your evenings. Be safe. We're thinking of those of you out in California, by the way, as well. Hopefully you guys are managing through all of those fires. But anyway, in the stock market, we remain bullish, heading into some of the most bullish time period for the year traditionally. So with that, I want to wish you all the best of success with your trades and your investments, and David will be back with you tomorrow. Take care, everybody. Bye-bye.